What's up, boys? Thanks for the compliment to the editor. By the way, if you check out my Twitter or, of course, the locals page, my editor is getting married next month, and I have a fundraiser crypto wallet open for him that we're trying to gather up together to give him a nice honeymoon. So that'd be awesome of you guys. Yeah. How about we just hop in a bit early? Hello, welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by ByBit on the internet and Matthew in real life. And we have yet another episode for you guys. Of course, the biggest news of the week, or the past week since I streamed last, was going to be the ByBit exchange hack and the burning of some Ethereum along with it. But then, as to not disappoint, of course, we ended up with a huge crash in the Bitcoin market. And that has been happening over this past week. I've been so busy that I didn't even notice. So I don't know how you guys have been, but that's kind of where I'm at. The good news about this in particular is that it is exposing the new trend within the price of Bitcoin, which is that Bitcoin has been at its lowest volatility in its entire lifetime. We are definitely shifting into a new era for cryptocurrency, I think. And so we're going to cover all that. If you've been buying GPUs, be extremely careful because there are ROPs missing on NVIDIA GPUs. We have specifications leaked and we'll do a hash rate prediction for the 5060 Ti. Apparently there's going to be two models, an 8GB and a 16GB. We're also going to be taking a look at the 9800 X3D chips burning up on Asrock motherboards. And we will be doing a review of the Pi network. I know this is a big token a lot of people have been talking about. They're like, hey, you're a miner. Why don't you talk about Pi? I don't consider mining on a phone to be a real thing. As I have a whole box over here from Luke. Thanks, Luke, for sending over the phone miners. I have not even hooked it up because he's like, you got to solder it. I'm like, bro, solder it for me. I don't got time for that. What do you mean? I'm going to sit around and solder for 5 hours. I can't even keep up with making YouTube videos right now. We also have a new release of BZMiner. So after the stream, stay tuned over on twitch.tv/blindrun. I'll link you guys over to that, where we will be continuing on checking out the wart hash rate on the RTX 5080, along with hopefully a few other things. And then we are going to be taking a look at another project, another GPU marketplace project called Nasana. And hopefully we'll get an idea of what's going on there, as well as the launch of MegaETH coming up, which is supposed to be a centralized layer 2 option to compete with Solana on the ETH blockchain. And then we have some drama, boys. The Cryptix network is accusing a lot of people of a lot of craziness. So we're going to be talking about the Cryptix network, their AI wallet searcher slash hash rate searcher, what it's been finding, what the validity is of a lot of their findings, and if you should be concerned. We also have an announcement from Hypra that I haven't covered yet, but Tagknife has kind of like left the project, sort of not. We'll talk about it. Don't worry about it. But after that, we are going to be reacting to yet another Upper Echelon video. If you guys haven't heard of Upper Echelon, he's a gaming YouTuber. He has over 750,000 subscribers. The reason why he's relevant, usually I like to react to smaller, crypto content creators, especially mining content creators. But in this particular case, we're seeing a lot of overflow, from crypto outsiders, and their perspective on cryptocurrency, I think, is extremely relevant right now. So that's why we're going to be taking a look at it. Before we get into all that, of course, I want to say thank you to everyone that's showing up here. Anonymous Miner, thanks for stopping in. Coinology, good to see you here. Lotus, Aussie, Design of Modern Life. We got another content creator in here, DJ Mines. So make sure you guys go sub to DJ Mines here on YouTube. We also have Edwin in the chat. Thanks for being here. And Chicken Ray, welcome to the stream. Nice name. Fabian, what's going on, my friend? And let's see, Pearl Rival. We got Jeff and Tactics up in here again. So good to see all y'all here. Oh, and we got a Mark from Coastal Crypto up in the house. So let's go ahead, hop into the first topic of the day. I think this horse has been beat to death, but we will chat about it because obviously you want my perspective, right? I mean, I don't know why you would, but maybe you do. We'll see how that goes. Let me get this chat shrunk down just a little bit. There we go. Now you can read the article. So, ByBit exchange was hacked. Over $1.4 billion in ETH-related tokens are drained. Cryptocurrency exchange ByBit has been hacked for over $1.4 billion in liquid staked Ether, Mantle staked Ether, and other ERC20 tokens, according to on-chain security analyst Zach XBT, who spotted the incident shortly after it occurred. Following the exploit, the on-chain sleuth warned users to blacklist addresses associated with the hack. ByBit co-founder and CEO Ben Zhu confirmed the incident and provided an update on the security breach. Zhu confirmed that transfer was made from Exchange's multi-sig wallet to a warm wallet approximately 1 hour prior. The CEO said that the specific transaction was masked to appear legitimate, but contained malicious source code designed to alter the smart contract logic of the wallet and siphon funds. So he said, quote, "Please rest assured that all other cold wallets are secure. All withdrawals are normal. I will keep you guys posted as more develops. If any team can help us track the stolen funds, it will be appreciated." The incident follows several high-profile hacks and security incidents throughout 2024 and early 2025 that left crypto exchanges drained of funds. The ByBit is solvent, though, is what they said. Even if the hack loss is not recovered, all the client's assets are one-to-one backed, and we can cover the loss, the ByBit CEO added in a separate post, which is pretty incredible. Every other cryptocurrency exchange hack, we do typically hear this. We hear, oh, we're still solvent, everything's good. And then like 5 days later, we figure out that they're insolvent. Now, so far, unless I need to go ahead and look and update, which we will get an update here as we look over this, but it looks like all of that has appeared to be accurate, which is pretty crazy that they can lose $1.4 billion and still be solvent. In the next statement, the exchange assured customers that its cold wallets remain fully secure, adding that all client funds are safe and operations continue as usual without any disruption. The price of Ether dropped over 3% following the hack's confirmation, as the breach, among the largest in recent crypto history, sent shockwaves through the market. Now, obviously, we could say that that is basically what is also causing the continued downfall of the market, because Ethereum, from the time of writing that article to now, is down another $400 US, and Bitcoin is at 84,000, dropping well below the $90,000 mark. We are hitting that point in time we'll talk about this a little bit, right? If we go over, the all time or whatever, you can see here we had that big pump up and then it went back down. Is that, where are we at? Are we from here to here, from the, the 40,000 mark down to the 35,000 mark from previous cycles? Where do you guys think we're at as far as all of this is concerned? I mean, this does look eerily similar to previous cycles, right? So we're kind of used to this sort of dip right around now. What did we say before, right? So we have until December to see the full run this time around. Previously, the full run went through, wasn't it March or April, something like that, of 2022, with the big peak being in 2021 around November. So I think we still have, a chance as far as the typical bull run. I don't think this is necessarily the end all be all to it. Is the ByBit Hack influencing this? I mean, to a certain extent, I'm sure it could. The overall retail sentiment surrounding cryptocurrency, as you'll see here in the video that we're going to be reacting to from Upper Echelon Gamer, is pretty much negative surrounding the entire industry. So people on the outside of the industry looking in, there's a pretty negative spotlight on crypto just because of the amount of meme coins that are getting rug pulled and that sort of thing. Plus these hacks don't help and so on. So, that is all something to take into account. Does it affect it this much? I'm not so sure. We'll be looking at why people think that it's going down as well here in just a second. But back to the hack, the crypto industry has experienced an uptick in hacks and scam-related activity in the first several weeks of February 2025. ZK Legend, a money market protocol in Starknet, was hacked on February 14th in an exploit that drained the protocol of 9.5 million, nowhere near the 1.4 billion of the ByBit hack. According to cybersecurity firm Sivers, the malicious actor bridged the funds to Ethereum and the Railgun protocol in an attempt to launder them, but Railgun returned the stolen loot. Jupiter, a Solana-based decentralized exchange, and former Malaysian Prime Minister both suffered social media exploits on February 5th. In both incidents, the threat actors used the compromised accounts to promote fake meme coins. Eliza Labs founder Shaw Walters was another recent victim of a social media hack. The hacker took control of Walters' X account and began posting scam links. Walters said the hack occurred despite having two-factor security authentication on his X account. Now, in regard to two-factor authentication, just so that everybody's aware, there's multiple different types of two-factor authentication that you can apply. One is going to be like a token based, and that's going to be like something utilizing an Authy app, where you end up having like a 6-digit code. Others would be like you get the 6-digit code in a text message, an SMS. Another one would be an email. And then you do have like your FIDO level security keys where you have to actually plug in a key to log into the website. Not to be confused with, here's the thing that I think a lot of people get confused with too. YubiKeys, for example, which are hardware authenticated two-factor authentication, you can plug those in and get a 6-digit code from plugging the key in itself for services that don't support, FIDO2 and hardware authentication, right? That is a potential possibility with using it. That would be the improper way to utilize a YubiKey if a more secure method of needing the key to authenticate directly to that service would be, right? So you need to be taking a look at that when you're applying those and securing your basically your web presence as a whole. And Twitter does support utilizing that hardware level authentication. To get even crazier, you can utilize things like the biometric YubiKeys or biometrics on like a MacBook, a laptop, or something like that, where your fingerprint is also required to unlock that, and that will help. Now, there is like a level of security, right? So for multi-factor authentication, the least secure is going to be email. The second least secure is SMS. I think in theory, it could be between the two. So you could say one way or the other. You could say that email is worse than SMS or vice versa. Only reason being, of course, is that, SIM swapping is going to be possible in that particular case with SMS, a little bit easier than email. It really is up to, I think, the skill of the hacker himself and which way is preferred as far as those two go. Both very insecure, don't recommend them, right? Then a token-based authentication is going to be kind of the step above that, utilizing an Authy application on your cell phone. Now, anything on your cell phone, just keep in mind that if you are running these things on your cell phone and it's not air-gapped, then you're going to be less secure. What is air-gapped? Air-gapped means none of the wireless technology that is built into the phone is actually active, right? So you don't want to have crypto wallets that aren't air-gapped. You don't want to have two-factor authentication devices that aren't air-gapped. You want air-gapped technologies. And this is like why I talk about in the past, of course, things like the NFC wallets, for example. I don't think those are as secure as like an air-gapped wallet that provides maybe a QR code for authentication. I have gone over particular devices in the past, but also just in general, any hardware wallet is dependent on the developers to patch firmware and security breaches. And so at the end of the day, for your cold storage, you really should be looking at just running some sort of paper wallet solution. So there's all of that, but that applies to everything, right? Your X accounts, your email accounts, your Gmail accounts, all that sort of stuff, right? And I think that's something that a lot of people miss. And it's crazy that we have, a lot of these C-levels that are basically getting social engineered, right? We've had the Zegex CEO was social engineered for his Telegram account and had way too much access, right? Why does a C-level for an exchange have database level access? I don't know. That seems like just a security flaw right off the bat. Any CyberSec guys are probably going to be like, no, unless the CEO himself is actually actively participating in the development on the database side of things, which I don't know the reason for that necessarily, but it's not great. Now, here's an interesting thing that happened with ByBit. They actually saw a burn happen. Now, this is nuts. So ByBit sees over 4 billion bank run after crypto's biggest hack. So this is the bank run. Where do I need to get this? So there was a burn. Let me see if I can find it. I thought I had this up, but I guess I didn't. So there was a ByBit hacker ETH burn, because we're also going to talk about the final results there, which is that particular one. Ethereum burn. Where is this? I'm not going to find it now, am I? It's not in my notes. Boom. Hey, TuberWorks, welcome to the stream. All right, so we're just going to continue on and get more information here. I guess I missed that one, but I could have sworn there was like 10 million or some sort of amount around that of an amount of the Ethereum that was captured in this hack that was also burned. Either way, the results are as follows, as reported by CoinDesk. there was basically a $4 billion bank run as well that happened after crypto's biggest hack. The exchange, facing a bank run, needing to process withdrawals, worked to secure a loan and developed a new software across frozen funds. So it goes over the ByBit hack, which we just covered. And then we don't know the cause yet, but major cryptocurrency exchange ByBit saw after this total outflows of over $5.5 billion after it suffered a $1.5 billion hack. So total outflows is $7 billion in outflows from the exchange. And that hack was believed to come from North Korea's Lazarus group. So the total assets tracked on wallets associated with the exchange plunged from around $16.9 billion US dollars to $11.2 billion at the time of writing, according to data from DeFi Llama. The exchange is now looking to understand exactly what happened. In an X-Space session, ByBit CEO Ben Zhou revealed that shortly after the incident, he called for all hands on deck to serve their clients with processing withdrawals and responding to inquiries about what is going on. During the session, he revealed that the security breach saw the hackers make off with roughly 70% of the client's Ether, which meant that ByBit needed to quickly secure a loan to be able to process withdrawals. Yet Zhou found that Ether wasn't the most withdrawn token, with most users instead withdrawing stablecoin from ByBit. The exchange, Zhou noted, has reserves to cover these withdrawals. But the crisis deepened as, in response to the incident, Safe moved to temporarily shut down its smart wallet functionalities to ensure absolute confidence in our platform security. So basically what they're saying happened here is that even though they had all of the cryptocurrency backed 1-to-1, right? So 1 Ether to 1 Ether, 1 Bitcoin to 1 Bitcoin, 1 USDT to 1 USDT. What the users were doing when they were withdrawing to protect their funds is they were converting to USDT and then withdrawing the USDT, for example, which is a stable coin. Now, they don't have necessarily, that puts a constraint on the actual total of USDT they have in reserves, right? So then they end up with basically an imbalanced liquidity, which is kind of like what happens with DeFi in a lot of cases, right? You end up like basically having too much USDT compared to the actual token, and it screws up obviously the trading in between those pairs. So same thing, but on a centralized exchange platform. So they had to figure that out. So they took a loan out apparently. And that's the explanation as to why it wasn't that they were insolvent, is what they're saying, right? It's just that they didn't have enough USDT to cover everything. So while the exchange had reserves to back up users' withdrawals, $3 billion worth of USDT was in a Safe wallet that had just been shut down as the wallet moved to understand the situation, according to Zhou. On social media, Safe said that while it had not found evidence that the official Safe front end was compromised, it was temporarily shutting down certain functionalities out of caution. While Zhou and ByBit's team were figuring out how to securely withdraw their $3 billion, withdrawals were mounting. Within 2 hours of the security breach, the exchange was facing requests to move over $100,000 off its platform, he revealed. Responding to the situation, he told his security team to engage Safe to find a better way to get this money out. The team ended up developing new software with code based on Ethereum to verify the signatures on a very manual level to move the stablecoins back to their wallet and cover the withdrawal surge. The exchange's team had to remain up all night to be able to fulfill withdrawals, according to Zhou. As the exchange managed to move the $3 billion in stablecoin reserves, it was facing a bank run of about 50% of all the funds within the exchange at the same time. Zhou said that since the incident, the exchange has moved a significant amount of funds off of Safe cold wallets and is now determining what the system it will use to replace Safe is. Now, if we were talking about, does this have an effect on the entire market? Well, obviously. So if there's a bank run of 50% and a majority of those funds are in USDT, that means everybody's selling their crypto for basically the US dollar. which is obviously going to drive the price of crypto down. Now, we are talking about trillion-dollar market caps within the cryptocurrency space. So does 3 billion have the kind of effect that we are seeing on Bitcoin as of right now? Not necessarily, but of course, this was pretty early on. So how much and how far spread is this? Is it impacting other people's viewpoint on cryptocurrency and causing them to trade back into, stable coins? That is probably the possibility there, right? So since the security breach, ByBit has engaged authorities during the session. He said that the Singaporean authorities took the issue very seriously, and he believes it has already been escalated with Interpol. Blockchain analysis firms, including Chain Analysis, were engaged, and he said, quote, "As long as ByBit is there and continues to track their stolen ether, I hope we can get the funds back," end quote. Notably, he revealed that pushing to roll back the Ethereum blockchain, which was suggested by some industry players on social media, including BitMEX co-founder Arthur Hayes, has been on the table for some time if the community agreed with it. Quote, "I had my team talking to Vitalik and the Ethereum Foundation to see if there's any recommendations they can offer to help. I do really thank all these guys on Twitter asking if there's a possibility to roll back the chain. I'm not sure what the response on their side is, but anything that would help, we would try," he said. Whew, this brings up a lot of issues. I mean, obviously, if we're talking about the capability of Ethereum to roll back the chain, that would completely discredit the decentralization of Ethereum as a whole. Now, people could say, well, the nodes voted for it, therefore we can go ahead and do it, but it obviously shows the willingness to basically not adhere to the principles of cryptocurrency if they do decide to roll back the chain. The thing is with Ethereum is we know that they're capable of doing it because they've done it in the past, right? And yeah, Lotus says, so we would have Ethereum 3. Yeah, we'd have ETH Classic, we'd have ETH ByBit, and then we'd have, Ethereum roll on once again. Remember, this has happened before with the original Ethereum. And a lot of people think, there's a misconception that Ethereum Classic stayed classic because of proof of work, but that's not true. The Ethereum Classic stayed classic because of a hack that was rolled back by the Ethereum dev team previously. So could this happen again? Definitely 100%. Do I think it will? I don't know. That's up in the air, right? When asked if rolling back the chain is even possible, Zoe responded that he doesn't know. Yes, it is. I can tell you guys it is because it's happened before. It's worth noting that a blockchain rollback refers to a stage change that would allow for the funds to be recovered. While rolling back the Bitcoin blockchain is technically possible, such a state change on Ethereum would be more complex given its smart contract interactions and state-based architecture. Nevertheless, that is a good point. So I will say this. It's a lot more difficult now with the amount of dApps on the Ethereum blockchain to roll back, and you would really hurt a lot of developers very easily that way, right? Nevertheless, any state change will require consensus and likely lead to a contentious hard fork, drawing criticism from the community. This would likely split the Ethereum blockchain into two networks, each with its own supporters, just like we saw with Ethereum Classic. As for what exactly caused the hack to occur is still unclear. Per Zoe, ByBit's laptops have not been compromised. He said the movements of the transaction signers have been scrutinized but appear to have been routine. Quote, "We know the cause is definitely around the safe cold wallet. Whether it's a problem with our laptops or on safe side, we don't know," Zoe added. So just a quick, history lesson from that perspective is that is why Ethereum Classic, ended up in the position that it's in. And I think the important thing to note there is that, as it pertains to cryptocurrency in general, the reason why Bitcoin is king is because we don't have these people that can interfere with it on a rollback level. And this would be a contentious hard fork, and it would just go further to proving, the centralization of Ethereum, which I think, they're all down for in the first place, especially as we look at Ethereum Foundation's investment into MegaETH, which we're going to take a look at here in just a little bit. So, nothing's looking good for Ethereum or altcoins in general. Ethereum being the largest altcoin and losing trust like this obviously makes things much worse. I think the trust or lack of trust is going to fall on the centralized exchange and probably safe in general. Funny name to have because it's clearly not safe, but I would assume that that's where a lot of the distrust falls right now immediately. But that is going to flow into distrust of alternative cryptocurrencies, and seeing that we should have already had an altcoin kind of spike up by this point in the market, and that hasn't happened. There is a decent argument for, alt season not happening at this point because we're already moving into that initial correction phase of Bitcoin without any significant run up on the altcoin side of things, right? With Ethereum not even reaching previous all-time highs and retail looking at that down on that pretty negatively as it sits. If I talk to normal people, I'll give you an example. My dad called and he said, you were right. I want to take all of my Ethereum and put it back into Bitcoin. Can you help me do that? And I was like, it's a little late, but I can. But you should have done that, 3-4 years ago, and I told you to do it, not now, right? But it is what it is. People learn those lessons, and those are just part of the lessons that you got to learn right now. Is ETH is not a good store of value, right? For a majority of reasons, right? Not from the Ethereum Foundation controlling a large amount of the supply that they can sell off, to the centralization of the consensus mechanism on third-party cloud-hosted services. I mean, all of these things make ETH not a very good store of value. And if that's your goal within cryptocurrency, which I think for a lot of people it is, we like to talk about cryptocurrency getting utilized on a day-to-day basis. And I don't see Bitcoin being that necessarily, or even Ethereum because of the fees being so high. But we could talk about these layer 2 solutions that are coming along. That's probably going to be a different piece, right? Altogether. And we'll have to see what it is. I would like to see it being something like Dogecoin because of the inflationary aspects of Dogecoin could fulfill that purpose probably quite well. Definitely wouldn't recommend Dogecoin as a store of value just because of its economics, but it is what it is. Thanks for the follow, Core Activities, by the way, over there on Twitch. So that being said, we have this massive hack. Things are looking terrible this week for mining, but in February, Bitcoin hash rate continues to grow. It's growing at a slower rate, but it is growing still. So Bitcoin mining revenue remains steady even at $1.4 billion in January, and public mining companies account for roughly 30% of the network's hash rate that month. Competition among the top 5 mining firms is intensifying. After months of rapid expansion, Bitcoin's hash rate growth slowed down in January, according to the latest report from the Miner Mag. The network's difficulty saw its first decline since September, indicating that even though publicly listed companies have kept increasing their hash power, their growth isn't enough to compensate for the capitulation of other probably smaller operators. The total revenue made from Bitcoin mining remained at a stable $1.4 billion for the month. Publicly traded mining companies, which collectively hold about 99,000 Bitcoin worth around $9.7 billion US dollars, accounted for about 30% of the hash rate market share in January. Competition between the biggest publicly traded companies has also increased. The leading mining firm, Marathon Digital, retained its top spot with a realized hash rate of 41.65 exahash a second, followed by CleanSpark's 34.77. Riot Platforms, which has been expanding aggressively, is closing in with 31 exahash a second. Obviously, Marathon Digital has expanded itself outside of Bitcoin as well to compensate for that. We talked about that last week with them using or utilizing revenue from Caspa in particular to cover the minting costs of Bitcoin so they can hold more Bitcoin, which is an interesting strategy, and I highly recommend taking a look at that video if you're interested. Quote, notably, the competition within the 30 exahash group is heating up like never before, while the gap between 30 exahash tier and 10 exahash group comprising Core Scientific, Cipher Mining, and Bitfarms continues to widen, the report said. The top miners taking more market share is hardly a surprise, as the recent halving event has cut Bitcoin mining rewards by half and squeezed the industry's profit margin. Even with the Bitcoin price near $100,000 in such an environment, it's tough for smaller players to compete with big operators, which are already positioned to dominate the market. In fact, a lot of miners are already looking for other revenue sources, such as hosting machines for AI and HPC firms. Now, of course, that's been something that's been being talked about for a long time, is all of these miners moving from AI to HPC. If you actually talk to the large mining firms, the only one that thinks this is a good idea is Riot. There's been multiple Q&As I was there with, at the mining conference. I was also there at Consensus, where they had a big meetup with the guys from, Foundry, Marathon Digital, Riot, all those guys. The infrastructure is inherently different. So when you read these types of things from CoinDesk, it's usually a false premise, right? I wouldn't be very confident that that's actually reality. I think that's a narrative that journalists are pushing that don't understand the industry as a whole, right? You're going to have to get redundancy. You're going to have to get large internet pipes. You're going to have to get high level, you're changing the infrastructure completely. And I don't think that's what's going to happen. More what you'll see, of course, is, moving outside of Bitcoin for additional revenue. Litecoin, like script miners in general, are probably going to be the next target of a large mining farm to compensate for loss of revenue on the Bitcoin mining side, if I had to take a bet. I think we already started seeing that at the lower level. And if you're in that 10 exahash range, that would probably be the smartest move to try to catch up with the 30 exahash range, right? The report also said that mining hardware imports to the U.S. also slowed in January, a factor contributing to the stabilization of hash rate growth. However, some firms, including Blockchain Power Corp and Acrohash, have imported a significant amount of cooling infrastructure from Bitmain. Looking ahead, the Mining Mag predicts another difficulty adjustment decline in February as some smaller mining operators exit the market due to lower profitability. Now, we always have this discussion of does hash rate follow price or price follow hash rate, and the power law with Bitcoin and other cryptocurrencies, whether that's Casper or so on. And if we look at overall, let's just do mining pool stats, right? Because that'll be the easiest one to click over to. You can see here we're still sitting pretty stable. We're not back over a petahash. We're still in the exahash phase. But for the past week, the Bitcoin hash rate has been relatively stable, with one difficulty drop that just happened here on the 26th. So we've had a little bit of a difficulty drop, but we did have a larger difficulty pump up on February 10th or so on, around there. So it's not necessarily 100% sure that we're going either way. Bitcoin tends to have, price follow hash rate, but in a big correction like this, it can definitely bring that into question. So I'd like to hear your guys' thoughts on it. At the end of the day, how much do miners really influence the price of Bitcoin anymore? Obviously, with the halving cycle, that impact is going to be less and less the further along we get, right? And so as miners basically mint less Bitcoin over the next 30 years, let's say, they will become less and less influential over the price of Bitcoin. And so the faster you change your emissions, essentially on any blockchain, when you're analyzing any proof of work blockchain, what you want to be paying attention to, obviously, is like how fast are miners going to be irrelevant in influencing the price of that cryptocurrency, right? Now, here's the good news. And even with this big dip, which I think we saw here, and then we saw another one, right? There is basically analysis showing the Bitcoin volatility is at record lows. So Bitcoin's range-bound trading is raising eyebrows among both traders and analysts despite the ByBit hack. Data from Cointelegraph Markets Pro and TradingView showed a quiet weekend for Bitcoin USD after snap volatility over the record hack of crypto exchange ByBit. Despite the dust still settling on the event, Bitcoin managed to pause erratic price movements as traders' attention focused elsewhere. Range is still ranging, popular trader Dan Crypto Trades summarized in one of his weekend posts on X. Meanwhile, volatility is trended down as prices getting more and more compressed. Even during yesterday's drama, price still closed at the same price region, which it has done so for the past 2 weeks. Now, obviously, this is kind of blown out of the water though, right? Because we just had a huge decrease in the price of Bitcoin, right? So maybe 1 month is a little bit better of a look, right? So we're all the way down to that 84K range. So maybe this analysis was a little too soon. But Dan Crypto Trades and other noted that the decline in open interest across exchanges dipping to its lowest level since February 9th per data from monitoring resource CoinGlass. Quote, generally a lower open interest with a higher price is something that makes for a good reset, even if it's just on a lower time frame. Still need spot to take it from here, he concluded. Buzz around strategy, meanwhile, came as a result of CEO Michael Saylor's posting a chart of the firm's existing Bitcoin holdings, a move which has recently become a classic signal that further buying has or will be taking place. Quote, I don't think this reflects what I got done last week, end quote, Saylor commented on the latest chart print. Now, obviously, he made that print on this downturn, which was down to 93,000. That buy happened and it continued to go down. So, on topic of volatility, though, on-chain analytics firm Glassnode revealed that Bitcoin's implied volatility has rarely been lower. Implied volatility reflects the standard deviation of market returns from its mean. Bitcoin's 1 week realized volatility has collapsed to 23.42%, nearing historical lows it reported on February 21st. In the past 4 years, it has dipped lower only a few times, October 2024 and November of 2023. Similar compressions in the past led to major market moves. Glassnode further noted multi-year lows in play for Bitcoin options implied volatility, an event that was previously followed by major volatility spikes. So what are we seeing now? Major volatility spikes. So this could be on point and seems to be, at least to me, signaling that we are going to, like, because we had this compressed volatility over the past month. Let me be clear what my thought process is. We've had the compressed volatility over the past month. We just had a huge move downward. And so if we just had that, then I would expect higher levels of volatility coming in the next few months, right? Towards the upside ultimately is what I would expect from previous halving cycles, which means that the dip down into the 80 range is actually a positive thing, not a negative thing, because we're getting out of this sideways movement regardless, right? So that's kind of where I'm at as far as that's concerned. Now, let's talk about GPU news. Let's get out of the crypto space, headspace for just a second. Let's take a break from it because we are going to get into a lot more drama here coming up. But let's talk a little bit about GPUs for those of you interested in GPU mining and stuff. The 5090 is released, but it's a pretty risky buy right now. 1, it's hard to get your hands on. 2, they've been blowing up. And 3, now, they're not even getting shipped with the advertised amount of ROPS. A member of the Tech Power Up forums has discovered that a Zotac RTX 5090 graphics card has missing ROPS. The Zotac Solid card, which should have 176 ROPS, is reportedly shipping with only 168 ROPS enabled. Tech Power Up, which owns the GPU-Z software, has extensive GPU BIOS database, also happened to have the same graphics card for testing. They confirmed that their review card has the same issue. In the original review, Tech Power Up noticed that the Zotac 5090 Solid card underperformed slightly and was falling behind the 5090 Founders Edition. They admitted that they didn't initially notice that their card had the same issue, and only after a discovery by the Tech Power Up forum member, Wooksy Gamer, did they confirm that their card had the same problem with the missing ROPS. In the first test, Elden Ring at 4K UHD, with maxed out settings and native resolution with no DLSS, the RTX 5090 Solid falls behind every other 5090 tested, including the NVIDIA Founders Edition, which serves as a reference design establishing a performance baseline for the 5090. The Zotac card is 5.6% slower than the Founders Edition and 8.4% slower than the Astral RTX from Asus, the fastest custom design card for this test. Officially, the Solid is clocked at 2,407 MHz rated boost frequency, matching the Founders Edition clocks. It shouldn't be significantly slower in real-life scenarios. The interesting thing is that the loss of performance is not visible when monitoring the clock frequencies, as they are high as expected. There are just a few units available to handle the rendering workload. The ROP units are responsible for pixel data, handling tasks like blending and anti-aliasing. They are one of the most important parts of GPU design, however, not for mining, if you guys are curious where I'm going with this. And NVIDIA often artificially limits ROP counts to maintain better SKU separation. Tech Power Up has confirmed that only the Zotac Solid RTX 5090 has been seen with this error. Perhaps it's just a simple BIOS mishap, or perhaps it only affects initial cards, but the damage has already been done. Even if it's fixable with a new BIOS, it will still require a BIOS update on a $1,900 GPU, which, good luck with that, $2,000 GPU. Zotac has not issued a statement on this yet, but Tech Power Up will work with Zotac and NVIDIA to send the card back and find a solution. What would be really interesting here is there is potential, obviously, that this is going to utilize less power on top of it. And so as a miner, when I'm looking at stuff like this, I love finding cards that they fuck up, right? I beat it and said it. Oops. So I like finding these cards, right? When the MSI RX 5700 had issues, the prices just collapsed on them. And it was luckily right before the previous bull run. And what that meant is you could buy a bunch of them and just repad those, right? Because they didn't install the pads correctly on the RX 5700s from MSI. So you were able to get them really cheap. Is there a possibility of that happening and them liquidating all these 5090s? Probably not. They're going to do their best to fix it in BIOS. If it did ship with less ROPS physically, then that would be the best case scenario from a mining perspective, because you're going to get lower power consumption with that same GDDR7 memory on that 512-bit bus, which is going to give you a huge advantage from a mining perspective. If you could get those for under the $2,000 price point, that would be pretty cool. So I'm kind of looking forward to it and seeing where it goes. It's kind of a positive from a mining perspective, at least, right? So that's kind of what I'm thinking. Now, we did get some specifications for the RTX 5060 Ti confirmed with a 180 watts confirmed. Apparently, there will be two variants, a 16 gigabyte and a 8 gigabyte. Now, the interesting part about this is we still get the same bus width and we don't get any total memory bandwidth performance boost in this apparently either, at least from what I can tell from what they're reporting, right? So what they had said is that both boards will have the GDDR7 clocked at 28 gigabits per second, and that it will have 128-bit bus for a total of 448 gigabytes a second of bandwidth. So if we did something like, let me pull up my hash rate chart here real quick, just so we can get the actual numbers for you guys. So if we took a look at, let's say the 5080 on Autolicos, which is getting that 331 mega hash a second, right? And we pull up a percent calculator. And we say, essentially, and then we need the 5080 specs, which I think we can pull up on Tech Power Up. So we have 960 gigabytes a second, right? So we say, essentially, what is the 448 compared to that? 448. Calculate that out. That's going to be 46%. So we say, what is 46% of 331? And we calculate that out. We'd be looking at an Ergo hash rate of 152. Now, the good news is that we could get extremely low power consumption out of this particular card, right? So we have a TDP of 180 watts. If we do the TDP on the 5090, let's look at this real quick. I'll pull that up for you guys. Where is it here? Clock speed, board design, 360 watts. So we can do 360, or we can do 180 is what of 360. Calculate that out. We know that we had 160 watts on there, so let's say 50%. I'm going to say that will be around 80 watts at the wall on the 5060 Ti with the 150 mega hash a second on Autolicos. So if we plug that into hashrate.no, let's go to our calculator and we'll find Ergo. If I can find it. There we go. 154 was it at 80 watts, 10 cents a kilowatt hour. Calculate that baby out. You'd be making exactly $0 right now, but 19 cents a day or 0.224 erg per day in revenue. So that's where you're at with that. That's my official prediction for the RTX 5060 Ti. Let me know if you guys think that prediction is on point or not and why, and we'll go from there. I think it's possible we get better power numbers, like all the way down to like, I think the best we're going to get is like 68 to 70 watts. That's kind of what I'm thinking. Maybe showing like 60 watts in the software, somewhere around there. Something like that. Now, Asrock has addressed the 9800 X3D boost issue or boot issues. I wanted to address this with you guys just in case you guys got one. I actually have an Asrock motherboard right here. This rig is an Asrock A620 with a 9800 X3D in it. I have not gotten the BIOS update for the A620 Mini ITX yet. So hopefully this doesn't catch on fire while we're filming right now. But as you guys can see, some people are getting burnt pins, unfortunately, on their Asrock X870 Nova. Asrock deployed a beta BIOS version 3.2 today to address it. And they did refute claims of permanent CPU damage, which that looks pretty dang permanent to me. But of course, Asrock has really gone downhill in recent years with their RMAs. I used to get RMAs from them quite well. I mean, part of that obviously was we shipped a crap ton of the Asrock mining motherboards for them. So I think they knew who I was and all that. But here recently I had a 7900 XTX that I tried to get RMA'd and they wouldn't do it. Now it was an open box item, But so they went through that whole policy. So I'll give them that. But they wouldn't even work with me, right? They wanted like full price of the GPU to replace it. So unfortunately, not very happy that they wouldn't even work with me on that. But it is what it is. Their support's really gone downhill pretty terribly over the past few years, but that's been kind of the same with everybody, even ASUS, right? They said that the reports are misinformation, but they did release a BIOS version. So let me ask you this. If it's misinformation and it's not accurate, why the are you releasing a BIOS update to fix it? Sounds like you're lying to me. Sounds like you're lying, you sneaky little bastards. It's misinformation. Quick, release the patch. Release the patch. Funny. Now, apparently, a community aggregated database on Reddit has documented 40 failure incidents already, with Asrock boards accounting for 32 of the 40 cases. However, the failure pattern is inconsistent, and some systems fail immediately while others operate normally for weeks before exhibiting symptoms. BIOS flashback procedures have successfully restored a functionality in multiple instances. So there you go. I am going to take a bio break, and then we're going to talk about the Pi network. Hey, I got it. Let me put a marker so the editor can fix that. It's cool. I shouldn't have muted. There we go. All right. What's up, guys? It's fine. Not muted anymore. We're good. Rewind. Rewind. Okay, so let's restart this. Let's go ahead and talk about the Pi network, huh? So the Pi network here just launched recently, and it is the reason we're talking about it is because some people say that you mine it. I think that's debatable. But in addition to that, it's obviously performing extremely well. here recently, going as high as $276, and it's up 62% over since its launch. And I think over the past 7 days, it had a pretty nice, or what was it, past day, it had a really nice recovery, and it's up 73%, right? So obviously, if you're invested in this project, it's looking very good for a lot of people. And it's a unique project. So let's talk about why it's blowing up according to, CoinDesk, and then we'll kind of talk about what the project is and kind of do a little bit of digging. But the token debuted at $195 billion value despite minimal liquidity. Pi's network native token traded with an initial fully diluted value as high as $195 billion US dollars. The token debuted at $1.70 and it rose to $2 before losing 50% of its value in the next 2 hours. Pretty common, obviously, for new launched projects overall, but obviously it went up from there. So it currently has a market cap of 6.1 billion US dollars. Pi has drawn comparisons to viral tokens from previous cycles, for example, SafeMoon, with a referral scheme that gives early holders and referrers an advantage over newcomers. Now, as someone that's been, a lot of people are asking me, like, why aren't you talking about it? It's a mining project, blah, blah, blah. As soon as I saw it, to be completely honest with you, I was a little off put, because I have seen SafeMoon. I've seen projects like this destroy people very quickly, right? And as of right now, it's looking good. It's going up. But if you FOMO in, you can be in a very precarious situation. Always remember, with these kind of referral cycles, especially when you start seeing content creators releasing their referral codes and pushing those referral codes on you to sign up with, you need to watch out, because the only one that's going to succeed here are those influencers, and those influencers are going to get you to use their referral codes. What does the referral code give them? It gives them some of the token usually. What do they do with that token? They sell it eventually. So they drive the price of the project down, and they have no skin in the game because they're getting the damn thing for free. So don't listen to these hustling crypto YouTubers trying to get you to use their goddamn referral codes to dump on your fucking heads. How many retards do we have in chat today? Let me know. Does that mean the whole project's bad? No. It's just very frustrating that I see this time and time again, and people keep falling for it. Dear Lord, man. All right. So what is it? Pi Network, the smartphone mining project that claims to have 60 million users, released its native Pi token Thursday, giving traders a roller coaster ride that saw the price rise 18% in minutes before tumbling 50% over the next 2 hours. Pi debuted at $1.70, rising as high as $2. It was recently trading at 97 cents. Obviously, today it's at $2.75. The initial surge sent the fully diluted value to as high as $195 billion, which it already talked about. So the FDV is based on the maximum supply of a token, not circulating supply, right? So that's 100 billion in this particular case is going to be the maximum supply of the Pi network. The self-reported circulating supply is 6.3 billion, putting its market cap around 6.1 billion. That's the current market cap, okay? Pi Network has drawn comparisons to viral projects from previous cycles, including SafeMoon, which also attracted a retail audience with aggressive marketing and referral schemes. In order for users, don't forget BitConnect as well. In order for users to begin mining the Pi token on a mobile device, they must first receive an invitation from another user. They are then issued with an invite code that they can share themselves. More tokens are rewarded for each of the referred users, creating an ecosystem that mirrors multi-level marketing or a pyramid scheme. Spot on. That's what it does. Okay. And you're going to see, especially with the price right now, I think you're going to see a lot of influencers pushing this on you guys. And it's a Ponzi. And if this becomes as successful as BitConnect or SafeMoon, at least one of your favorite influencers is going to end up in prison over this, just so you know. Okay. And to all the influencers that watch my channel, I'm going to tell you, be careful. I've seen this happen before, and I've told people directly that have gotten in trouble doing this stuff not to do it, and I was right. This gets you in a lot of trouble. If you do it at a low enough level, you get away with it, sure. But this stuff can get you in a ton of trouble extremely quickly, okay? So exchanges currently lack sufficient liquidity to handle the billions of tokens being traded. In fact, even the most liquid exchange, OKX, has a 2% market depth of between 33,000 and 60,000. That means an order of, say, 100,000 would move the price significantly, creating a volatile trading environment. Market depth measures the amount of capital required to move an asset in either direction. Based on the token's market cap, a 2% move would equate to a $146 million shift in the project's value. Pi Network has attempted to remedy a disparity between buyers and sellers by offering holders a lockup period, which can be up to 3 years. Now, what is already happening? What are they trying to manipulate? They're trying to manipulate the people that are selling and not buying. They're running out of liquidity to fill the sell orders, and so they're offering a lockup period to stop people from doing it. So if they're manipulating it to that point, why is this doing this? Because of the manipulation that they're having on the market and the unavailability of people being able to sell the token. So does this chart actually look good? No, it doesn't look good. This looks bad. Because as soon as there's an availability to sell, what's everybody that's been getting you to buy and use their referral codes going to do? They're going to sell. Felt like we needed to address this because I keep seeing people that I think get way too many followers talking about this shit, saying stupid shit, and they're going to get in trouble. Whew. If you want... I have no problem with phone mining, by the way. If you want to phone mine, use a decentralized project like Coin. Okay? All good. Go mine some Coin. Take care of that stuff. I don't say this because if I really dislike the people, I'd be calling them out by name. I don't dislike the people that are pumping this up. In fact, I think they're just stupid. I think they're just stupid and they don't know what they're doing. They haven't seen this before. They don't know what they're getting into. And I think that's the position that I would take on any of this. I don't think that any individual is a bad person. It's just not going to end well. It never ends well. It never ends well. Okay? It makes me mad when people fall for this stuff and then they get their entire audience into it and then people get screwed. So, there's a block explorer. There is a node. We could go over the white paper. We could do all of that, but just the nature of the way they have the multi-level marketing for you to be able to mine in the first place is the biggest red flag. I mean, we could go through and try to find other red flags. I don't know how necessary it is or how angry it's going to make me to continue to go through it. But it is what it is, right? Now, there's a computer app that you can utilize, and that allows you to interact with the Pi app on your phone from your computers. There is a node, which I think we had pulled up the release of the node over here somewhere. Or no, this was the Block Explorer, right? So this is the node information. Okay. So if we go, we can download the node for Mac or Windows. It doesn't look like there's a Linux command line option at this point, and I don't see a GitHub necessarily. It doesn't say if there's an incentive for running a node at this point either, right? Let's see if we can see anything on there. No rich lists here. No, just okay. And then let's see if we got there. tokenomics here somewhere. All right. Here you go. So it's a 20/80 Pi token distribution with 20% going to the core team and 80% to the community. It looks like, so the Pi community has 80% of the Pi core team has 20% of the total circulating supply of Pi, regardless of how much circulating supply there is in the Pi network at any given point in time. Thus, a given total max supply of 100 billion Pi, the community will receive. So it says the core team's allocation gets unlocked at the same pace as the community progressively mines. So I guess it's a 2-to-8, right? So that would be a 4-to-1. As you mine, a quarter of that is unlocked for the core team, okay? So what we would need to find out then, so the pre-mainnet mining rewards were 20 billion, which means as of right now, 5 billion Pi is in the hands of the team already. And if we read this, if it was at total, ooh, that's rough. So 6.1 billion US dollars with the team currently controlling 5 billion. Is that accurate? That was at that price. No, double this price. Yeah, so they control 10 billion of a $24 billion cap. What's the cap now? Let's go look. We can just look at that. We don't have to ask. 18. I was close. I said 20. Okay, so they control currently 5 billion of the 18 billion in supply, I think. Currently. I have to do this math a little bit more, but they control 20%. But it unlocks as you mine it. But to be clear, they had a testnet mining, incentivized testnet. So similar to Fish Hash or KY, right? As far as that is controlled. It does require invite codes, and you need to be extremely careful with this one, guys. Another rug. So people always get, I think there's always this like misconception of like what a rug pull really is. In this case, you're not, it's the same scheme as like a BitConnect or a Safe Moon. It is essentially, it's not that you're necessarily getting rug pulled by the dev team. It's usually that you're getting rug pulled by some other holder of it, right? BitConnect. Yeah, you'd be another like Trayvon James or something. Too sketchy. Fair launch, proof of work, layer 1 cryptocurrencies should be your primary, okay? Playing stuff like that. Look, there's going to be people that are going to be making money off of this. I bet you're going to be seeing people pump this up left and right, dude. I bet you're going to be seeing people show their wallets all over Twitter. The price is going to look really high. What they're not telling you is there's not enough liquidity to actually sell it. And once they do sell it, that price is going to go through the floor. That's how these things usually play out, right? Yeah, Luna, FTT, all of that, right? Pigeon Coin. All right. I'm done. It's fine. I'm a little angry, but I'm done. It's fine. Let's talk about miner releases real quick. We have a new release from BZMiner. It's version 23. Biggest upgrade here is it does support NVIDIA Blackwell 50 series. So I did hook up the, let me see if I can show you guys. Bam! Hey, look, a new camera. Hi. You can see the test bench back over here. The 5080 is hooked up to it, so we're ready to go as far as that's concerned. So we're going to be doing some testing on that. So stay tuned to the channel over on twitch.tv/blindrun if you want to watch that live. They did some Warthog updates and optimizations. And it did say, important, as of this version, BZMiner may no longer support Ubuntu 18.04 or older Linux versions, so you will need to update your operating systems. Now, I do need to check with him on this in particular because I do believe that will affect the support for the BC250, which requires an older Linux kernel on Hive OS, which means this version of BZMiner probably won't be compatible with Hive OS and the BC250. It might be compatible with MMPOS because the latest version of MMPOS still supported the BC250, but when Hive updated their Linux kernel, they broke the BC250. So it'll be up in the air as far as, like, I think this will... BZMiner will still work on the latest version of MMPOS with the BC250, but if you're on the Hive side of things, this is going to break your BC250s, if that makes sense. Okay. Yep. So that should give you the rundown on what's going on here and my kind of assumption of what's going on right now. I will talk to IEDoc and Hive OS. I don't know if they're still working on a fix for the BC250s. But as of right now, I wouldn't update your BC250 rigs to the latest BZMiner if you want to continue to mine it. So there's that public announcement over there. Yeah, the autofocus on the second camera is kind of bad. And so I am going to work on that, but it's an A6000. It's pretty old. I'll just have to manually put it in, and it's because I'm moving around, right? So, like, it's slow. And there's no direct light. I did buy a new light that will go over here and we'll get that going. But anyways, it's a work in progress. It is what it is, right? Let's talk about Nosana. So if you guys are aware, a big transition here recently has been the move to cloud solutions for AI workloads, and a part of that has been enabling users to, basically put their equipment up for use in these workloads. So we have like Vast AI, Chlor AI is a crypto version of that. A lot of different ones. Salad, for example, is a version of that. There is a new one out now too. I just wanted to bring it to y'all's attention in case you wanted to go see kind of what the earnings were like over there. It's called Nosana, and I don't know how new this is. This was written on 1/14/2025, or it was last updated on that. And this is the getting started page. It's linked down below if you want to check it out. But the Nosana network connects GPU hosts with clients who need scalable, cost-effective GPU compute. As a GPU host, you'll contribute to a decentralized ecosystem by listing your NVIDIA GPUs on the Nosana marketplace for AI inference and compute workloads. The software, which connects to your hardware to the marketplace to register your device, it must include a compatible NVIDIA GPU, and the hardware requirements are as follows: 12 gigabytes of RAM, a 256 gigabyte SSD. Large language model storage requirements can be high, especially with models geared towards high-end GPUs. So they recommend ancillary storage of up to 1 terabyte to be provided. And you will need 100 megabytes or megabits per second download and 50 megabit per second upload. That's a lot of bandwidth. And high-speed internet is required, so keep that in mind. They recommend 500 down and 250 up. That could be per client too. I don't know. Anyways, and a ping below 100 milliseconds. It supports all of the 40 series, the 30 series, and then, of course, the A series, so the A4000, 4500, 5000, 5500, 6500, all those sorts of things, and the HX100. super expensive ones. Obviously, they'd love to get that on there for you. It is Linux only, so if you want to install it on Windows, you will have to use WSL2, which is the Windows subsystem for Linux, the new one. And other than that, you can utilize Ubuntu, which is probably what I would suggest anyways, because Windows subsystem for Linux is just a pain in the butt, as it is my humble opinion, because you got to do all those other funky settings like power settings and all that with Windows to make sure it's not shutting down. So there you go. You can host your GPUs over there. I have no idea exactly, how much they're paying or offering or anything like that. It's just another option. So I thought I'd bring it up in case anybody was not aware of it, right? Let's talk about this big topic as well now, which is going to be MegaETH. And this is aimed to basically save Ethereum. Now, for those of you not in the know, Ethereum is still doing extremely well on an institutional level, and institutions are looking at utilizing essentially the Ethereum blockchain for tracking assets, all that sort of thing. So it's still very relevant on an institutional level. However, on the retail side of things, Solana has really been kicking its butt, and a lot more competitors are coming up. And we have competitors, of course, in the likes of Coinbase with their Base network. We also have Sui with their the Sui token, and obviously they're going to be looking at basically utilizing smart contracts for ownership of gaming assets. There we go. Had a little bit of a clip there, but we got it. And so they're losing the retail market, or Ethereum is losing the retail market to all of the competitors, with Solana being the biggest one. A huge reason for this, from the analysis of the owners of the project of MegaETH, is that it is because Solana is more centralized, saying essentially centralization and ease is creating an ease of use for the retail market and influencing Solana to take over. Now, the competition or the solution to this for Ethereum to be competitive is going to be MegaETH, and it claims to answer Ethereum's scaling and sentiment problems. Prioritizing speed over decentralization, the new L2 will apparently feel as seamless as using a Web 2 app or a centralized exchange, and run on an order of magnitude faster than all the other rollups and Solana combined. In short, the aim is to make Ethereum great again. It'd be easy to dismiss this as pure hyperbole, but MegaETH is backed by some of the biggest names in the industry, including co-founder Vitalik Buterin and Joe Lubin, as well as a few others, including OG influencer Kobe, which I follow on Ethereum, and how I ran into this in the first place, by the way. Due to the launch of its public testnet in the coming weeks, the EVM-compatible chain has reportedly hit 15,000 transactions per second in private testing, while using 60x more gas than the existing Ethereum rollups like Base. That gas figure, and I should say Base, is going to be, I called Base a competitor earlier, and that was retarded. Apologies. That is an L2 on Ethereum. Let me correct that. It's primarily Solana and Sui that's competing for the retail market. I don't know why I slipped up and said Base. Anyways, that gas figure is set to double when the proprietary parallelization engine is switched on, and the aim is to scale the layer 2 all the way up to 100,000 transactions per second and 10 gigagas. Gigagas. There we go. Gigaga. BANANAS. The shit is gigagas. Gigagas. There we go. There we go. I did it. I need a drink of water. All right. I need some water. All right. There we go. All right. So it's centralized scaling. And this is what I was saying in the first place, because this is a controversial approach. Here's the problem, guys. Solana's winning. Whether we want to admit it or not, Solana's winning, and by and large, it's winning because it is centralized. Maybe that doesn't play out in the future, but as of right now, mining Solana and ban that fool. So to achieve the heroic levels of scaling, MegaETH has cut a lot of corners. The team prefers the term optimizations by removing some of the key components that make blockchains. Unlike other L2s and rollups, it has no plans to ever decentralize the sequencer, which allows it to use a bunch of high-end equipment to ramp up throughput. Data storage has been outsourced to the less secure and as yet not battle-tested EGN-DA rather than Ethereum. And the L2 is missing plans for a crucial component of the don't trust, verify ethos, which is consensus, where all the participants in the network agree on the state of the blockchain. Basically, one person will be saying whatever the state of the blockchain is, fully centralized. All L1s require this, but L2s have the ability to opt out. Delphi Digital researcher Prasad Mahadik, explains decentralized consensus slows blockchains down. Quote, the speed of light acts as an ultimate bottleneck, and the more nodes there are dispersed, the more time it takes to get consensus, he says. MegaETH, being an L2, has only one sequencer and doesn't have constraints of hardware requirements, Mahadik says. Obviously, from a security perspective, this is massively insecure. It takes only one hack of one sequencer to destroy the entire ecosystem, right? And that's a big problem here that I think is going to be like, obviously, that's the problem. There you go. That's the problem. It's a big problem. But let's talk about it in comparison to Solana, because obviously this is supposed to be ETH's savior for Solana, right? Make Ethereum great again. I think to do that, you would need to go proof of work, but what do I know? It's hard to see MegaETH as anything else but Ethereum's layer 2 answer to Solana, which has been eating Ethereum's lunch for the past 2 years with its faster, cheaper chain that uses expensive equipment in data centers rather than Ethereum's maximally decentralized network, which is designed to be able to run on Raspberry Pis. Now, here's the funny thing about that in general is that while Ethereum can run on Raspberry Pis, a majority of people running staked nodes are in traditional data centers utilizing cloud hosting services. The key to this could actually be upping the system requirements and remaining decentralized as a solution, as opposed to running a single sequencer that you control, or basically that you control. So I think you can decentralize and up the performance of the equipment at the same time. Crypto influencer Bread, the project's public face and head of growth, says that Ethereum's focus on decentralization above all has left L2 leaders like Bassi's Jesse Pollack desperate to scale faster. Quote, he's literally pleading with Ethereum developers and saying, guys, like, we're getting our ass kicked here by Solana. Says Bread, who says Sol's prioritization of scalability was influential in MegaETH's development. Quote, we have made design decisions that allow us to scale vertically, which to me is kind of similar to Solana, he says. We want to be super big, we want to be super fast, and we're going to do it as an L2 construction as opposed to doing it as an L1. It allows us to make even more opinionated decisions on how to enable some of those upper bounds of performance. Being an L2 arguably allows it to make even more sacrifices to the scaling gods than Solana can, as it still retains the security of Ethereum's base layer. we make some pretty key trade-offs to allow us to be even better than Solana, purely better than all L1s in some regards. But has MegaETH got the balance right? And if these trade-offs are able to attract critical mass of users, what will that mean for competing L2s like Arbitrum, Base, Optimism, and Starknet that are currently constrained by Ethereum's data blob capacity? Will they be forced to abandon their own plans to decentralize or to use an alternative data availability in order to compete with an L2 running 500 times faster? Arbitrum and Starknet both declined to comment for further on this story further. So it goes over how it began. The big things for you guys to pay attention to here is like, what's the next big thing as far as DeFi is concerned in that space? I think MegaETH is going to be one that we want to pay attention to, as much as we may hate the centralization surrounding it, all that sort of thing. Really, Solana's come out of nowhere, and with its scalability has taken over the entire DeFi market from a retail perspective. This strategic move from MegaETH to be a layer 2 on Ethereum is really interesting, and it does have massive, large capital backing with Dragonfly Capital, Figment Capital, Robot Ventures, and like we said earlier, you have some big influencer names behind it, as well as Vitalik himself. So it'll be interesting to see what happens. The speed is going to be really, really interesting if it does hit that 100,000 transactions per second as well. So I think that could be really interesting overall. Apparently there's some cool apps coming as well, but I don't want to cover everything, all that. I just kind of wanted to do a brief overview of it because I still like to go back and see what's going on with that entire space. Now, this one's going to be a little hard to address. So, the crypto community surrounding cryptocurrency projects, communities versus developers. How do we put all this? It's a small space, right? And there seems to always be a lot of headbutting going around in the entire space, as there should be, because how do you get better and how do you get growth? Well, you iron sharpens iron. So to a certain extent, that's going to happen. I think there's some negative sentiment surrounding like crypto communities from a developer perspective, and the inability, they feel like I think individuals that are in the community don't understand the complexities of blockchain. And then the community is always putting a huge burden on the back of the developers to make the price go up, and it puts a lot of pressure on it. And then I think a lot of these projects collapse because the devs just decide to go do something that they can actually make good money on, especially in the layer 1 proof of work space. Now, a while ago, there was a project called Ethereum, which implemented essentially Blake 3 into the ET hash algorithm and enabled basically EVM on a layer 1 blockchain that is only mineable by GPUs currently. It was a pretty big deal. Now, one of the main developers for that was, of course, Tagknife. And on 2/19/2025, he posted a community update, which was "The future of our chain is in your hands." He said, "I want to address something that's been nagging me all year. There seems to be an expectation that I should be responsible for everything on the chain, deploying dApps, driving use cases, and defining how the network evolves. But that was never the vision, and it's important to set the record straight. My role versus the community's role. My job, as defined in the white paper, was to build a proof of work EVM chain, a decentralized, stable, and open foundation. That work has been done. The network has been running in its Shanghai upgraded state for months now, proving its stability and features work on proof of work chains. But a blockchain is only as strong as its community. It's not up to me to dictate how the chain should be used. That's your role. It's up to the community to shape the network, create dApps, deploy smart contracts, and define its future. An EVM chain needs dApps and ecosystems to survive. Without applications, there's no purpose, no use, and no future. Right now, engagement is low, and if that doesn't change, the project won't survive. There's not much I or anyone else can do to change that if the community doesn't step up. This reality became painfully clear when, after every single release, the immediate response was, what's next? Instead of building on what we've delivered, growing the ecosystem, or utilizing the tools we've developed, the expectation has been that I should just keep doing everything. As a developer, that's insulting. Imagine putting in months of effort to push out an update, only to have people ignore what was released and immediately ask for the next thing. That's not how a healthy community should function. Now, I think that the base premise of basically being a community is a false premise in general, and these projects are extremely difficult. So I understand the frustration from the developer's perspective here. I really, honestly, I get it from Tagknife. Here's the thing that needs to be brought up in general is it seems like the devs always want to put the price not going up on the community and vice versa, right? The community wants to put the price not going up on the devs because not enough's getting work's getting done. The fact of the matter is both people are at fault, right? The fact is that everybody is using other proof of stake options for their DeFi. A majority of the liquidity in the crypto market is either in a store of value in Bitcoin or it's being traded in Solana meme tokens. And there's not a lot of money flowing into these smaller layer 1 projects because, well, frankly, there's just not a lot to do on them. Now, I don't know what the state of the tools are on Ethereum, which is now Hypra, been rebranded to Hypra. I don't know what the state of the tools are there. I haven't looked into it in some time. Maybe I can. But, if people aren't building those big projects, then there's not going to be any success there. And by and large, this is a problem with everything, right? This is the problem with Ethereum Classic. This is the problem with Ergo. This is the problem with, even Radiant, right? I've deployed on Radiant. Those tools are great over there on Radiant, by the way. And there needs to be a lot more people building. But until there's stuff built on the projects, there isn't a lot to do, and the community's not seeing it. Other things like wallets that actually function well, all these types of things. How can you expect anybody to put any liquidity into a token that you own or you're mining unless there's actually something to do on there, right? And so I think that's what this really is at the end of the day. And here's the big downside to it, right? Overall, which is what he mentions, is that there's a fixation on price. So another issue I see is the obsession with price over development. A healthy blockchain grows through utility adoption and community effort, not by chasing listings and price pumps, which by and large, the reason why Solana is popular is everybody's chasing new token launch price pumps. That's literally all crypto is right now. We've talked about this numerous times over the past few months. It really honestly is destroying the altcoin market in general. It probably is one of the highest contributors to a lack of an altcoin run or altcoin cycle, this cycle. And it's not working, right? The reason why proof of work from a GPU mineable perspective was so successful previously was because of the amount of people building NFTs, dApps, DeFi platforms, all of that on Ethereum. As much as we don't want to admit it, that's what it was, right? The community collectively raised $35,000 for a Bitmart listing, but after getting listed, almost no one traded there. As a result, we were delisted, a complete waste of funds that could have been put towards development, marketing, or real ecosystem growth. Price follows utility, and this will always be true, by the way. If you want the chain to have value, build things worth using. Don't speculate about it, make it. The project has never been a pump and dump or get rich quick promise. And I think this is a misconception as well, because and the thing is, there's different participants, right? And this is the hard part. As miners, our job is to secure the network. It's not to be a part of the community. It's not to be a developer, to deploy anything on the net. All our job is, and I think this gets misconstrued too, so I'm going to say this to Tagknife. You can't expect me to mine your project if you don't have the utility and the actual price to justify me mining and providing security to your project. That's my role. That's our roles as miners, right? The community, I suppose, role, which it's not been, the community's role as of late is to just buy the token and try to convince everybody else to buy the token so they can dump on their heads. The community members in cryptocurrency right now are the biggest pieces of shit in the whole fucking space, and they're retarded. They are trash human beings. A community should be building the tools, just like he said. I agree with him. The community should be using the tools or building the tools that make the blockchain usable. That's what the community should be doing. Forgot to use the beep. Damn it. Now, I think that there are good community members that are building things. Yes, it's not everybody. And a majority of those community members that piss me off are buying meme tokens on Solana, and they have nothing to do with any of these L1 projects in the first place. I get that. But everybody has their role. And like as a miner, the role is providing security in the network. That's what you should be focused on. That's already a full-time job, right? A developer that's working on, providing the base level development and the tools to deploy the dApps and everything, that's their job, right? Everybody has their role. That's like Tagknife's job here. And then there's the community that should be, in theory, building the applications and the projects that people want to utilize on the platform, right? And it really, so somebody in chat says, like, is there a platform for those tools though, or does the devs need to create the platform first? In most projects, those tools are there. Now for Hypra, which is a good question, let's see what they've done here recently. Let's go look at the Hypra crypto. Let me see if I can get over to their website and let's take a look at what tools they got, right? Because this is a good question. He says that they're all here, right? But is that true? Now I know you can integrate into EVMs here, right? So yes, the tools are here. If we go to GitHub, bridge circulating bridge contracts. Yeah, so if it's fully EVM integrated, then yes, it's all here. Now, do they have, so for example, do they have, if I say find out more, do they have the guides and the ability to learn how to do it with wikis as good as like Ergo, for example, or Caspa? Right, the Caspa wiki is really good. No, not necessarily, right? But this is something the community could do, is the community could build out, the wiki for Hypra and say, hey, where do I get, the guide to do here? How do I deploy a contract to Ethereum? A lot of this is really going to be if you have one specific EVM dev that is familiar with all that, he can put together a wiki to help people deploy. That sort of stuff probably in theory should be done by the community. Yeah. But that's a good question, right? It definitely doesn't look like as built out as like a lot of other projects right now, though. I will give you that, right? This is the next topic. Let's skip that for a second. So RetherSwap offered me full control over their platform, and I refused. Why? Because it goes against the very principles of decentralization. This is exactly the kind of thing I'll keep talking about. People expect me to take control. Now, I haven't used RetherSwap. Maybe that's a good thing to Google. But my understanding is RetherSwap's down. So that's gone. As far as I can tell, it seems like Hypra's done skis, boys. Well, this was posted on... Yeah. Yeah, I think Hypra's toast. I mean, the chain's there, though, if somebody wants to build on it. There's that. Okay, so I think that wraps up my thoughts on that. But we do have to talk about some... So, all right, we talked about... Do you guys remember Cryptix? Cryptix, the Caspa fork that then released the AI that scans for bad actors that are mining and all of that. They have like a ton of claims. They're claiming some pretty crazy stuff that I don't know exactly how to verify. Because first of all, like if anybody's used AI, they know that like AI gets things wrong. So I can't confirm that this is like actually correct or not in the first place, right? Because I don't know how you would. But they're making a bunch of claims. Now, some of them, when I look at them, seem like, okay, I see that that's happening. The first one, this is cool. It caught this, right? It says, to all pool operators, there is a bug that allows users to generate unbelievably high fake hash rate with a single GPU up to 150 gigahash with an RTX 4060. This hash rate is not real and does not contribute to block rewards. No actual block rewards will be generated. Additionally, the blockchain does not recognize this hash rate. It is purely an internal issue within the pools. However, this can be exploited in PPLN mode, where users are paid based on their hash rate / share. Since pool miscalculates the hash rate, users can be fraudulently overpaid, leading to a financial loss for the pool and legitimate miners. This issue must be immediately fixed across all pools. It is not just a problem with Cryptix, but affects nearly all coins. We tested this exploit yesterday in solo mode to avoid harming anyone, and it worked on almost every pool except ByBit Mining, our plant, where it did not. To protect your pools, you must enforce a maximum difficulty setting. I recommend setting 40 as the base value. The bug is triggered by multiple variable difficulty adjustments from the miner. Protect your users and enforce maximum difficulty across all coins. In Mining Core, which is awesome, they say you can fix it with this setting in the config.json file, and they are testing that fix. They said that their AI is what caught this, and it also incorrectly recognizes it as an FPGA, but it recognized the suspicious behavior, and that is how they found the bug. So that's pretty cool. They also froze a user's coins, which I'm not so happy about, because there seems to be a lot of developer overreach, right? So like I appreciate what Tagknife is doing, which is like, hey, you guys build everything. And then we have the whole other flip side, and then those projects go nowhere, right? And then the projects that seems to be an overreach of power by a multitude of cryptocurrency developers, including Warthog, which we talked about, freezing the ZX wallet. You know, Cryptix is freezing a user's wallet. Obviously, they were cheating on the network. Obviously, that needs to be fixed at the pool level. Arx Crypto and Mining said he had the same issue on his pool, and his solution was to make all pools solo. I think you can adjust the diff setting in Mining Core, but I don't know what pool backend you're using. So I don't know. That obviously is like a censorship. And there needs to be a way to fix these security issues without like manually freezing wallets. Yeah, freezing wallets just isn't cool, as Tony says in chat. That's true. Don't like it. Now, things got really weird and extremely awkward here today at 2:31. Cryptis from the Cryptix Discord posted this. He said, we are currently working with U.S. authorities to investigate the CEO of an ASIC FPGA company where an employee attempted to defraud the Cryptix network. The investigation in Vietnam against the employee is ongoing, and all evidence has already been confirmed, which they didn't provide any evidence, so I want to make that clear. Now, regarding the manufacturer, it appears that the entire company is built on mailbox addresses. We identified addresses in 4 different states, and community members checked one of those locations only to find there's no actual company presence. The CEO of the company heavily promotes Made in the USA with his biggest marketing claim. Yet the hardware is manufactured in Vietnam and only distributed in the US. This is already a criminal offense. We have filed reports against him in both the US and Vietnam. Whether all the addresses are fake, we do not know yet, but we assume they are. It is also our initial investigation suggests that this is part of an organized international criminal activity with multiple layers. The CEO presents himself as an investment advisor, but for now, that is only speculation. What is undeniably a fact, which they didn't provide, is the financial fraud, market manipulation, and production of illegal electronic devices for criminal financial gain. And to be clear, he hasn't provided any evidence for those claims, but said in Vietnam, multiple legal complaints have been filed against the employee and have been accepted by high-ranking authorities. We have also a lawyer representing us there, whom are paying out of our own pockets. I have received threats from an anonymous account on Discord wanting me to stop snooping around or face serious consequences. Am I afraid? No. Now I will dig even deeper. He says, we are fully committed to bringing this company as CEO and the employee to court in both Vietnam and the U.S. right now. Our entire team is focused on sorting out the addresses and companies, structuring the connections so that the authorities will have the easy time proceeding with the case. One thing must be said, how stupid is it to attempt to fraud against a cryptocurrency that specializes in anti-fraud AI and actively fights crypto fraud? That must be extreme greed, but I guess since this company never faced any consequences before, they felt invincible. They even used their official company email for the attempted withdrawal at MegaCEX. MegaCEX. There you go. I shouldn't say sex out loud there, but CEX. How dumb is that? And to those reading this, we will turn your entire company inside out, every address. So this is a big threat that he posted. Now, he didn't specifically state in this post who he was referencing. However, I have been informed by multiple people that he is referencing Osprey. Which is the FPGA manufacturer. Remember, they were the first one for Caspa. They basically make control boards for FPGA boards that go into a system and you can mine with. Now, am I positive that they're talking about Osprey? No, not necessarily, because they specifically themselves have not told me that it's Osprey, right? All I know for sure is that I have had users tell me that it's potentially Osprey, and that is all I have to go off of. Now, I do have, basically, there is somebody that does reply to this and say, yes, it is Osprey within their Discord as further evidence over there, but I don't know for sure. Oh, did they say Osprey in the announcement? So I have the announcement here. Where did they say Osprey in the announcement? because they don't say it here. So which announcement? And they don't say it in the Discord. Okay, there's an older post. Okay. So people have told me it's Osprey. Now chat's saying it's Osprey. I want to address that, okay? Osprey has sent me equipment. All right. They're in Texas. So I have a bunch of stuff pulled up here. Let's go ahead and go through it all, right? Now here's the reason I know they're in Plano or something. I think it's Plano, Texas. And that's because they did not let me keep their units because they're really expensive and they're a small company. So I had to ship it back to them. So I do have the original shipping label here, the RMA that they sent me to send the Osprey E300 back to them. You can see here that the address is 1309 Summit Avenue, Suite 7, Plano, Texas, 75074. Now, another thing that I wanted to point out about this one in particular is that it's a public address and it is a registered business address. If you take a look at the street view for this particular unit right here, number 7, as you can see, you'll see that they have two basically liquid cooling radiators outside of this warehouse with another exhaust fan over here, making it very clear that some sort of mining is going on in this particular unit. So there is a physical location. It's in Plano, Texas, and they are clearly mining out of this location. Now, could this be shut down now? Sure. This was taken in November of 2023, and maybe it's shut down now. I have reached out to Osprey personally to ask them if I can go actually tour the facility and just confirm that they're doing business out of there. Now, Cryptix Hack has made some extremely crazy claims, including saying these are only mailboxes. This is not a mailbox. This is a physical location. They are making legal claims without any legal backup, and they are not providing any evidence. Obviously, that is a big problem for me because, like, they tend to start. We seem to have a few projects. Look, this is getting extremely frustrating. WhoHash is DMing me all the time, like talking about a bunch of drama, which I don't want to be a part of in general, but I also want to cover the news. But we also have all this stuff happening at the same time, and they're not providing sufficient evidence. They're making a ton of claims. They're attacking other individuals, and they're not providing any evidence. And I don't know why this is happening a lot right now. So where will these suits go? Are they even real? I don't know necessarily. But I do know that there is a physical location for Osprey. I've worked with them. I've sent their units back to them. I've had them shipped to me. Obviously, I didn't suggest that anybody should buy the units. But that's kind of where I'm at. Now, to give you guys an idea, if you do put in this address, you will get this company, which is Green Dracana. But you can also see that they are sister websites to Osprey. So they do sell other CPU cooling systems, hence why you see the cooling systems outside of their building there. But if you go to their contact, you can see here that that is also Osprey Electronics, okay? Now, what is it that they're doing as far as what are they doing illegally? I guess my best assumption is they're trying to say that they're mining on the networks early. And apparently, yes, so Rusty in chat says that the OP said that Osprey was alleging of a pre-mine. I don't like... Okay, well, if it's your network and you launched the network and you didn't implement ASIC and FPGA resistance, that's your fault. That's the developer of the cryptocurrency's fault. That's not the fault of the hardware manufacturer. If you're not smart enough, I don't know. I'm not saying you're not smart enough. I'm saying that was your job. It's your job to make it ASIC resistant. It's not their job to just be like, oh, I won't touch it. Given the opportunity of making more money, people will choose the opportunity of making more money. It doesn't mean they're defrauding anyone. They built equipment that mines more efficiently and faster than the equipment you are encouraging other people to mine with. That doesn't make any sense to me. I don't know that that's their argument, and they didn't provide any evidence, so it's completely confusing. However, I just wanted to show that there is a physical location. I have it on Google Street View. I have shipped stuff there. I've had stuff shipped back, and hopefully we can see, what all is going on. Because I have no idea what's going on. It doesn't make any sense. I see this, and then I see people flip out, and I get all the messages, and they're like, can you believe what Osprey's doing? And I'm like, what do you mean? What are they doing? And then I go try to get evidence, and there's no evidence. There's only counter evidence. Proof of physical location with a warehouse that's mining out of it. And physical communications. So I don't understand what they say is illegal at all either, Pure Crypto Boss. It doesn't make sense. They didn't say what it was. They didn't articulate it. And so if you're hearing this kind of stuff go around, always remember, verify. Don't trust, verify. I'll try to do my best to bring this stuff up and try to verify it. And if I can't, I will tell you I can't, like I am right now. But that's my only position, is like, you can't just go ham. If you have legitimate reasons, like it's a clear pyramid scheme, then sure, go hard in on it. But like, if there's not any evidence, like I don't know what to do about this. It just doesn't make any sense. Finally, speaking of, like, obviously ton of drama going on everywhere. There's a huge negative sentiment surrounding cryptocurrency, and we are going to watch a gaming YouTuber by the name of Upper Echelon and his opinion on cryptocurrency. This video is called The Crypto Disease. Entire nations are now scamming.
Cryptocurrency and the community behind it is a disease.
Oh, come on, man.
Quite a few people angry, but quite frankly, I don't care. And I also don't feel the need to pepper in a whole bunch of qualifying statements for these people about how it's not all the crypto fans or not every ecosystem out there, because the rot is now so pervasive and so widespread, it deserves to be categorized with a broad, sweeping brushstroke. Of course, the exceptions to that statement are fully self-aware of who they are. Thus, they won't be angered by this kind of joke.
Yeah, and so the people that aren't, by the way, are legitimate proof of work, layer one, fair launch cryptocurrencies with utility. That's it, right? And anything else right now, I think I tend to agree with them. Every meme coin on Solana, give it that broad brush, right? Anything that is trying to sell you ASIC shovels, give it that brush. I don't mind going that far, really, even. But I see his point. I agree with it.
Generalization, because they know it's true and doesn't apply to them. But to reiterate here, cryptocurrency and the community behind it now are a disease. I'm going to focus on the concept of meme coins for today, but before anyone starts whining about how that's a fringe topic or non-reflective of the crypto community at large, no, it isn't. Sure, it used to be, but that idea that meme coins are some sort of fringe movement that exists only in the periphery of the crypto industry is now categorically false. I've talked about it before in separate videos, but I'll do a simple overview right now for people who never saw it.
Actually, he is correct. That is false, because meme coins are the majority of tokens being launched, right? We talked about why there's not going to be an alt season this time, right? Or why there might not be one. And the reason is there's too many tokens, right?
Fun. Pump.fun is the epicenter of meme coin depravity. Over the last 14 days, it's processed $2.5 billion in volume with tens of thousands of tokens created daily. Pump.fun is a rigged casino with the lowest common denominator of gambling addict on planet Earth.
Yep.
And for anyone who's getting defensive right now over the tone of my voice and the selection of my words, good. That means you're one of the people who needs to hear it. It's actually a myth that YouTubers are somehow obligated to be respectful to all of their viewers.
Yep.
They're not.
You hear that, bitches? I got permission.
Pump.fun is a manifestation of greed. As much as anyone can believe in this word, it is evil. People are attracted to this platform because they can not only make money, but they can reinforce their own chances of making that money by racing to the bottom of human decency. These people call themselves degens, short for degenerate, because somewhere deep in their psyche they know what they truly are. And they refer to the practice of gambling meme coins as the trenches. The platform livestream feature, during its very brief lifespan, became a haven of provocative, shocking, and criminal activity. But for those of you typing out a poorly written comment right now before listening to the entire video, and some of you certainly will be because he can't say that about me, just stop. Yesterday, the 21st of February 2025, a meme coin was launched on Pump.fun, rapidly achieving a valuation in the millions of dollars. But this meme coin was the tokenization of a man's death. I'll not be showing it. I will not be giving the name.
I heard about that.
This token was launched because someone chose to repeatedly play Russian roulette live on a broadcast with the worst possible outcome and said, if I die, I hope you all turn this into a meme coin. It was turned into a meme coin, rapidly pulling in millions of dollars from this community as people used the tragedy for personal gain, while the tag, suicide, trended on Pump.fun in one of the sickest displays of human behavior that you'll likely ever see outside of the dark.
Have you guys seen how high up suicide is now? Like the second leading cause of death in teenagers in the US right now?
Web. Make no mistake, I'm fully aware that this kind of behavior exists in the world, but it shouldn't exist out in the open with the rest of us. And it should be relegated to fringe, dark, and difficult to access corners of the online world.
I'll subscribe.
Afraid to ever be seen in the light.
Do I need to? I mean, the dude's got like almost 1 million subs. I think he's good. He doesn't need a crypto degen sub into him.
People deserve, the ones trading and profiting from this death token, that they deserve to be ostracized. But instead of facing societal stigma, the crypto community is now emboldened every single day to continue this kind of behavior because presidents and nation states are now becoming vehicles for meme coin scams. 48 hours before he was sworn into office as president of the United States, Donald Trump launched his own meme coin on Solana. So far, it's extracted, I don't even know how many tens of millions of dollars from his most dedicated fans, funneling that money to insiders and special interests. But what if I told you that the tragedy I just mentioned, the man who played Russian roulette repeatedly, what if I said that according to his social media activity, he claims to have borrowed money from his parents to invest in Trump coin before it collapsed? What then? Not even one day later, as if the soon-to-be president running a scam wasn't enough, his wife did the very same thing. Melania's token was even worse, but...
Yeah, how do you guys feel about the Trump and Melania tokens? Because I'm conflicted on them. I'll be honest, right? Obviously, I always say mine don't buy. So by and large, this sort of thing doesn't impact me that much. Like I swapped some stuff that I mined into it. So at the end of the day, I don't really lose a lot. And I'm extremely conservative with everything, right? Like I think selling Caspa at 4 cents is a good idea. That's how conservative I am, right? I'm all about generating revenue. So I don't like sit on these things like this. And I think it's kind of cool that we have like a presidential meme token. I think it's kind of fun. Like I think it's fun, but at the same time, I think that it was, here's what I think it was damaging to the cryptocurrency community and the perception of it, because what it shows is that, but it also shows, I should say, I think it's damaging from that perspective, but I think what it also shows is that there actually is a complete misunderstanding and inability to control the market by even the developers and stuff, right?
Realistically, what could anyone do about it? Trump was about to be sworn in as leader of the free world, and we don't even have regulation for the crypto market right now, so what could be done? Answer, nothing. Now, there's a phrase.
Now, that wasn't like, so he had basically a fallacy there. What is that fallacy? So so his argument was like, you know, what if I told you the guy that committed, it was appeal to emotion is the fallacy. So actually, I'm a little like upper echelon's usually pretty good about these things. And I completely agree with like everything he said in the beginning about the degens and the problem with pump fun. But when he tried to appeal to emotion by saying the guy that committed suicide, which this whole stream's going to get screwed now. The guy that unalived himself is also the guy that, you know, it is because he bought Trump token. That's just an appeal to emotion. That's not a good argument. That's a fallacy.
That what happens in America proliferates to the world, but honestly, I never really bought into that. Maybe it was true from a utilitarian perspective. A technological advancement may spread because it has reason to spread, and countries necessarily adopt things that benefit them. But I never really considered that crypto scamming, the same way it happened in America, at the highest level of our government, might also spread to the world. And you can call me naive for that, but I guess I have just too much faith in humanity. Well, shortly after Trump and Melania
I
promoted
made
scams,
5x on Trump and lost it on Melania. I mean, that's the lesson, right? Like so I said this multiple times as it pertains to the tokens. The easier it is to create, the worse it's going to be. Right. And the fact is Solana's made it and pump funds made it so easy that it's just going to get devolve into worse and worse. Right. I've always said this too with like finding mining projects, right? The harder it is for you to obtain the coin from mining it, the higher likelihood of it being successful it will be. Right.
Central African Republic, CAR, did the exact same thing. Not as an individual politician this time. It was done as a policy of the country itself, it appears. A symbol of unity, they said, clearly emulating the tokens that came before them from the Trumps, which has now cratered as well by almost 99% from its peak value. Investing $10,000 at the height of CAR tokens' initial rise would now be worth less than $200. But the thing we need to remember is that meme coins are no longer some sort of fringe concept in the world of crypto.
Fair.
It gets infinitely worse from there. The same people, at least some of the same people who orchestrated the Melania token launch, have gone on to do it again, this time in South America, with Argentinian President Javier Milei. This one, called Libra, wasn't just a meme coin, or so they said. It was a mechanism driving, quote, the future of freedom and growth in the country. Excerpts from the website say things like, quote, Argentina.
Remember when this was like, so this all happened previously too, right? So this has happened in 21. This happened in 2018. Like the only difference is it was a lot harder to do. Remember, it wasn't, so Libra was actually another project too. There was a layer 1 named Libra. There was another coin called Pero, or not Pero. That's dog. What's oil in Spanish? Anyways, there's another one called that was created in Argentina. Like this stuff there's nothing new under the sun.
Is full of talent, innovation, and entrepreneurs with great ideas, but resources to bring them to life are often limited. The Viva la Libertad project was created with a clear mission: to boost the Argentine economy by funding small projects and local businesses, supporting those who seek to grow their ventures.
It's going to drive me. Petro? No, the token was called Petro, but that's not oil in Espanol. It's called Petro, which is gas, right?
And contribute to the country's development, end quote.
I just remembered it was called Petro. It's called Petro. I thought it was going to be a big thing because that was early on in crypto when I got by that stuff too.
Meme coin launched on Solana.
I still get got. Let's not lie, okay? I still get got.
Again, but it was also advertised as so much more. you can still open the application for funding on their website. It's just a Google form, a simple one, but the atmosphere of this token was not just a meme. It was, this is an actual part of the Argentinian government. And the launch was directly promoted by President Milei. Sadly, it was a $100 million scam. Insiders cashed out, the price of the token fell, the president deleted his endorsement, and it turned out a guy named Hayden Davis, also responsible for launching and sniping the Melania token, was the architect behind this project.
Oh, Doctor
Hayden
responded?
Davis,
Maybe we can cover that after
from
this.
Texas, supposedly.
Thanks for letting me know,
King
Johnny.
Moron. But somehow King Moron is launching crypto scams at the highest level of nation states. After Libra went sideways, Davis decided to do an interview with CoffeeZilla, thankfully. That's probably the best person to extract good
I'll probably wait
information,
and save that and cover
in which
it
he
tomorrow,
incriminated
actually,
himself
Johnny.
on upwards
I have
of
to
a
do
dozen
some due
international
diligence.
finance crime.
So on the WhoSat versus SRB miner thing, I have to do some due diligence. Since I'm dealing with two people that are causing drama, I have to actually make sure I have all the facts straight. So give me a little bit of time to still do some more research on that, because that's what that's in relation to, isn't it, Johnny? That's Doctor responding to my question about WhoSat's allegations. Yeah, that's going to take more tact than just reading it on live stream. Because my goal is never to just like, yeah, not my goal is to do my due diligence on those things. That's that. Whew.
And even began asserting that the Trump token was dished out to insiders at a crypto ball in Washington, D.C. Messages appeared, allegedly, sent by Hayden Davis, saying things like, quote, "Sweet. Also, we can have Milei tweet and meet in person and do promo. I control that, blank. I send money to his sister and he says whatever I want and does what I want. Craziest shit," end quote. Or another.
Them getting caught with this stuff is so hilarious. And like, frankly, like, obviously there's some things that like upper echelon saying that I don't fully agree with, but a majority of it here, probably 99% of it I agree with. And some of the, I think there's like only one fallacy so far, but it's like the reason we need to be aware of this is, one, look, what is that quote? The quote goes something like, if you believe something is true, then you need to like question that more than anything else. So if I believe that like crypto is the future and I think that ultimately like crypto is good, then I need to question like everything surrounding crypto as much as possible, right? And we also need to be aware of like what the retail sentiment surrounding it is too right now, which is not, honestly, is not looking good.
Another one, allegedly, quote, "Yeah, fellas,
And
to be
rightfully
honest,
so.
we are trying to max extract on this one. These founders, I don't know if they are bad guys or good guys. Normally we are very keyed in to the launch, but this guy is weird," end quote. At this point, the reality of the situation is that a 28-year-old directly facilitated not one, but two separate meme coin scams on two continents featuring two different political figures at high levels of government. And it is no longer possible to say that meme coins are a fringe concept. Meme coins are a mainstay, damaging, and quite frankly, in my opinion, criminal aspect of cryptocurrency, which is now one of the most prominent daily occurrences at the highest level of government across the globe. In Argentina, President Milei is now rightly facing a fraud investigation and possible impeachment. But what about America? The president and his wife executed meme coin scams, and our media didn't even talk about it. The figure responsible for multiple of these high-level token launches openly states that crypto is a rigged game made for insiders and alleges that Trump token was the exact same thing. But nothing happens. In one group,
They still haven't sold any of that 90% they control though, right?
are the crypto fans who knowingly perpetuate a system like this, thinking, it's okay, I'm not the dumbest one. I can make money from someone who comes after me and offload it to them. And in the other camp are fanatical political zombies who mindlessly accept, defend, or handwave away anything that this administration does, regardless of how obviously and truly wrong it is.
No, I do have to agree with him. I have completely flipped on that. Like, obviously, like from a public perception, I thought, here's the thing. Here's what I thought. First of all, as far as tokenomics are concerned, like it looked like, I think genuinely, I think that Trump and Melania and that whole crew kind of got played by the developers of the meme coin and the snipers on the token. And like I always say, you can only make so many people millionaires before they want to realize they're millionaires, right? People are just going to dump when they can become a millionaire. And that's a majority of the problem in the market, right? It doesn't mean that there's necessarily malicious things happening, right? However, you would have expected a presidential candidate to have more wisdom than to work with the people he worked with on this particular project, right? Which clearly there wasn't. So then, of course, that brings into question of like, what else is not getting proper research and due diligence on his part, right? And you guys know that I'm pretty bullish on like Trump in office for cryptocurrency. But I have to be realistic about it. And I do have to question these things because, like, frankly, it doesn't look good. He's completely correct.
I guess the third group is people like us who see right and wrong on full display here. But apparently we're the minority because...
Well, the problem is that the pendulum's swinging, guys. So you remember, like, so here's how it goes. There's people on the left and the right, and the pendulum swings back and forth. And there's the people in the middle that once it swings past them, can see it swing past them, and they don't sway one way or the other. Then there's the people that are on the ball of the pendulum, swinging back and forth and just changing their mind every 4 years. And then there's the people on each side that only see the wrong the other side doesn't see the wrong that their side does, right? And right now, what's happening is we have people that are not seeing the wrong things that are being done, even as minute as like Elon Musk lying about playing Path of Exile 2. As much as like I get it, people are like, well, you shouldn't care about that, blah, 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 he's a successful millionaire. I'm like, but that displays character. And it makes me question his character. And do I want somebody with that kind of character deciding on what is happening to all of the government funding, right? At the same time, I really like all the transparency that I'm getting from Doge right now. I love it, right? So it's always trying to maintain as much, like it's trying to not hop on the pendulum swinging back and forth, right? That's what it is all about, and trying to see reality overall.
This is the world now. Cryptocurrency and its community are a disease. What started as a fringe mechanism for degenerate gamblers to get their...
Which to say all, by the way, is a fallacy too. So he has two fallacies in this video.
...fix is now a mainstream technique used by politicians at the highest level in multiple countries, directly harming their own constituents, fans, and citizens. The damage being done is becoming immeasurable, and yet people still try to somehow defend it with lackluster claims about,
I'm not a disease, says tactics.
Don't expect to make money or free market. Just one problem. Libra wasn't a meme. It was billed as an economic vehicle for the benefit of small businesses. And when talking about a financial mechanism like Solana or Pump...
Yeah, but Trump and Melania, which he was talking against, those were both specifically classified as memes. So by his reasoning, Trump and Melania are okay.
Or meme coins in general, or even crypto at large. At what point does something become damaging enough to get put down? Like literally put down forcefully. There are no benefits to Pump.Fun. None. Zero. There are no positive things that have come from it whatsoever. Not a single one. On the contrary, the financial harm it has caused is enormous. The meme coin vehicle has now graduated to the level of nation states. And I think it's time we realistically ask the question, when does something deserve termination? Pump.Fun and the concept of meme coins deserve to be terminated with prejudice. The people advocating for them should be shamed and ridiculed until they are unwilling to publicly voice their positions. Financial consequences
He's going really hard on this, dude.
of the harshest order should be levied against every single person even tangentially involved with meme coin product launches, including sitting presidents. Because without making an example like that, the rot will continue to spread. Obviously, none of that is actually going to happen, sadly, but this channel is whatever I want it to be, and right now I want it to be this. Crypto may have started as something legitimate or interesting or valuable, and I was the kid back in college ranting about blockchain and how it might change the world. I was the one getting funny looks from people when I wouldn't shut up about Bitcoin way back then. But this is the worst possible version of what the industry could ever become, and it's not slowing down.
I think I do agree with that. I think Solana is probably the worst version of cryptocurrency that it could have become. Other than maybe Ripple. I think I do agree with that. I'm not going to lie. But we still have Bitcoin.
Ultimately, I can't actually do anything about it other than make my position clear. So that's what this is. My position is clear. And thankfully, my conscience is clear because I don't trade in, support, advocate for.
So here's the question too, because Scott in chat says people will stop using pump fund and it will die just like every other crypto fad. But pump fund has become more of a gambling addiction than anything else. And the question is, like, do people stop using DraftKings even though they've lost all their money on it? No, right? So pump fund might be the only thing that sticks around because people are addicted to it. Solana is fast and easy to use, EL. That's why everybody uses it. Right. But the easier something is, the less likelihood of being successful as an asset it will be in crypto usually.
Or associate with.
The difference is like if you just own the Solana token, right?
With any of this garbage. That's it.
So Crypto Tony says that Solana is unreliable, and I used to think that too. But then I started using it, and when everybody would be like Solana's down, I would be actively using it while people were saying it was down. And like the down moments that they have are like milliseconds. Like everything that they say about it is down is blown out of proportion, is what I've noticed. So I don't know that that's actually accurate.
If you want to support the channel, check out the links down below.
All right, he's done. So that's Upper Echelon. I'm going to link the video for you guys to go check out. I think it's important to listen to what other people are saying about this type of thing. And I think that he's correct in a lot of aspects, dude. I think he's correct in a lot of aspects. And that's scary. As somebody like myself who is really into cryptocurrency and wants it to succeed, it's like I realize that I have that bias, but I also realize that he's completely accurate, right? Like there is this problem within cryptocurrency where we have a ton of really sketchy financial projects. What I always say though too is it is like the internet boom, right? There was a bunch of those scam websites with the internet. Eventually all that works itself out. Kaz is a layer 1 and guided by the right ideals. No, they aren't, because they allowed ASICs on their network. Almost though. They did a pretty good job. And they perpetuated the shovel selling scheme that screwed a lot of people over financially and encouraged it. Because if we want to be completely honest about the way a lot of these layer 1 ASIC projects are functioning, they're just shovel selling scams. And you can wrap in a majority of them, right? Like that's what it's turned into. Now, is that necessarily the developer of the cryptocurrency intentionally doing that? No, that's not what I'm saying. I'm saying that's what it is, though. You can easily secure it with GPUs only. You're less secure when you only have a few set of manufacturers and large miners mining. Mara controls 30% of the hash rate network on Casper right now. And if you include their pool in what they control there, I mean, they control over half. It's less secure. It's more secure when your security is provided by the success of the blockchain, right? The reason why, do you know why Ethereum still is known to be the most secure blockchain? You know, they still claim that they're the most secure blockchain. Do you know why they still claim that? It's not because they're proof of stake now. Ethereum was proven to be the most secure blockchain when they were still proof of work and ASIC resistant. And they just kept that claim. But that was only audited when they were proof of work. But they still say they are. ETH had ASICs. Yes, they did. But the ASICs were still not competitive. So here's the difference between an Ethereum ASIC, especially at the time, and ASIC resistance and the importance of it, and why ASIC resistance, even with ASICs on the network, is okay, is they utilized memory hardening, which meant that the cost of the ASIC equipment went up and their efficiency stayed on par with GPUs, which meant all you did was further decentralize the network. By adding ASICs to the Ethereum network as an ASIC resistant project, it meant that you actually increased security on the network by adding ASICs, not decreased. And increased decentralization because you had more equipment that could be leveraged to secure the network. Mara does have their own pool. They talked about that in their post because they make money off of their pool with fees too. They control 30% of the Caspa hash rate, but their pool controls a lot more than that. They're making additional revenue off of their Q10, it said, off of the pool fees for Caspa. Correct, AL. That's why ASIC resistance, like a lot of people want to say ASIC resistance is impossible, therefore you shouldn't do it. Because it's impossible to never have ASICs on the network. My argument is ASIC resistance further decentralizes the network by allowing other hardware to be just as competitive with ASICs on the network. Does that make sense? Scott says, so does that mean Raven will survive ASICs? It depends on the efficiency of the ASICs, right? And it's yes, what I'm saying is theoretical, but we do have a proven use case with Ethereum. So hopefully that makes sense. AL, I already did the video proving that that Mara is dumping Caspa. Yes. They're 30% of the hash rate and they dump over 75% of their coin onto the exchange to pay for Bitcoin mining. That's the short answer, but watch my full video with their Q10 report, please. I'm going to wrap it up today. I do want to do some testing, but it is getting late and I do got to be up early for work tomorrow. So I think we might delay the testing for the 5090 on BZMiner till tomorrow night. It will be on Twitch only at twitch.tv/blindrun. Make sure you're following over there. I do stream a lot more over on Twitch. If you've been seeing clips and saying, hey, I watched the live stream, but I didn't see that in the live stream, it's coming from Twitch. We are streaming a lot over there. So head on over to twitch.tv/blindrun and follow. Okay? I will see you next Tuesday. Oh, that's my game rig right there. Look at that. See? I can play video games. Yeah. Look. I'm all excited. Look, you can see over here. Hey. I don't know. Anyways, adios. Where's my song? Oh, I didn't upload my song here. Wait, is this it? No, but whatever. Enjoy this. Peace.